All right. I believe we are live. Give me just one sec to confirm, everyone. Hello. You might notice that there's a part of the stream missing today, that part being Brian. Brian is going to be away today because it's Thanksgiving in the United States. So happy Thanksgiving to everyone that practices it or observes it. But the markets do not wait. So we must move ahead. I believe I'm sharing my screen. Max and people in chat, tell me if I am. Let me make sure. Okay, so Max is giving me the green light that we are indeed sharing. Seems like a lot of people in chat already. All right, great. We are going to be talking mostly about Bitcoin today, guys. I will, however, be taking chat questions, but since I'm the ones sharing my screen and also looking at chat today, it might be a little bit chaotic, so stick with me, all right? I'm gonna try to do my best to streamline this, but solo casts are never easy, all right? So I do have Max, our founder, here, but he will be mostly hanging in chat. Like I might ask him a few questions, but he doesn't have a camera on. He's traveling right now, so it's mostly you guys are stuck with me today. All right, just so to set the expectations right. All right.
I can say a few words. My voice.
Do you want to say it right now, or should I give the introduction?
No, give introduction.
Okay, good. So as some of you may have already seen, we are experiencing another leg of a correction today. Seems like, obviously, there are a few different already schools of thoughts as far as why this is happening. Seems like it might be prompted by increased concerns over a new variant that has been recently uncovered in South Africa. This is an article from our good friend Omkar from Coinbase, who often uses our data in his articles, saying that not just crypto, but the entire sort of stock market and the S&P 500 index has slipped. The oil is down 2% over variety of concerns about this new variant popping up in South Africa that might be immune to vaccines to a point. So it's still very early days. Nobody really knows what the hell is going on. But stay safe, wear a mask, and in the meantime, it seems like the market is reacting to the news. I mean, I would assume this has at least something to do with the dump has something to do with the news. It's the same thing that happened back in May with the massive correction. I mean, the May of 2020 when the real Black Thursday began. So I wouldn't necessarily say that this is anything that's going to be. I don't think that this was prompted by on-chain data. Somebody asked me yesterday in the general channel. I think it was Lam Paul, right? He asked me what I thought about Bitcoin, and I said I think there are some relatively decent signs or signs of strength in Bitcoin's on-chain data, and I stick by it. I think it's still, from a fundamental standpoint, Bitcoin to me doesn't look that bad. There are some macro indicators that I'll talk about here that are still worrying, but that's not going to change. I think for those to really reset, we're going to need to drop much lower than here because we've been overvalued for a while. But as far as short-term correction is concerned or short-term price action, I think Bitcoin is still looking decent. So I'm going to go first over some general network level metrics just to sort of give you an update on where Bitcoin is right now based on the total amount of activity on the network. And then we're going to talk about sentiment and whales because both of those as well as derivatives data, because both of those, or all three of those, have some very interesting developments over the past couple of days. All right, good. Let's start with general on-chain activity. So what you guys are looking at right now is the total amount of active addresses, and I'm actually going to zoom in here. We're looking at the total amount of addresses, unique addresses, that are interacting with Bitcoin over the last year. So, I mean, we harp on this every call, so I'm not going to talk much about what happened here. Obviously, with the May correction, we have had about a 35 to 45% drop in daily activity on the network. That was generally indicative of a lot of people being scared away from the market, and we have sort of moved into a network-wide lethargy. Between May and July. And at some point we started moving upward, which is what we usually need to see for a sustained price recovery, generally speaking. high price action really likes high network activity and sort of an increase, sustained increase in day-to-day network transactions. Generally speaking, active addresses are very often used by on-chain analysts as a proxy, an on-chain proxy for token-related demand. So the more addresses on a daily basis, the stronger the network effect, and in general, the speculative interest in the coin rises. All of those things tend to be pretty good for the coin's price action as well. So we've been talking about how daily active addresses for Bitcoin have been rising pretty steadily over the past couple of months. And then I wrote an article a couple of days ago. You might have seen it. If you haven't seen it, make sure you do. It's on insights.santiment.net. It's our weekly report. Just go to app.santiment.net, and then there's an insights page here, and you'll find it. Just scroll down, and a couple of days ago, you'll find it. In it, I said, when it comes to on-chain activity, the week ahead may actually be pivotal for Bitcoin's end-of-year performance. And I really did mean it. The reason why is because the Bitcoin's network activity has pretty much, kept toe-to-toe with Bitcoin's price action. Actually, to be fair, it has still lagged behind the levels that we've seen in the first couple of months of the year. But momentum-wise, trend-wise, we were moving in the positive direction. Like for the first time in a while, we broke a 6-month high in daily active addresses. For the first time in a while, we were actually able to break more than 1 million daily active addresses for a couple of days in consecutive iteration. Generally speaking, we were moving in the right direction, and we were very close to repeating the same sort of historical high levels of activity that we saw between January and May. The real question for me was, what happens now that we're dumping? Because generally speaking, very often when you see a decline in price action, a lot of network activity disappears as well. So if we, similar to May, now start to experience some sort of a network decline, that might be a sort of a tricky sign for Bitcoin's price action, right? So from that perspective, I was quite worried about what is going to happen with Bitcoin's price action in days and weeks to come. So for now, and let me zoom in a bit so you can see it. For now, we're actually doing better than I expected. I actually thought that Bitcoin was going to move back to like very low 900,000 or 850,000 level for the entire week. It did not. It very quickly rebounded back to 1.08 million daily active addresses, which is totally fine. I think it's still sort of maintains the same upward trend. I think generally it is a very strong sign, especially given the fact that Bitcoin's price action was not that good. In general, I thought seeing any type of boost or spike in network activity while the price deteriorates is strong and is good. So generally speaking, for now, I think Bitcoin's network level activity is fine. In fact, if this continues, if Bitcoin starts consolidating here or even drops a little bit lower as the news about this new variant spreads, if Bitcoin drops lower and we do continue to see network level activities increase, I think that could constitute a bullish divergence where there's more and more value transfer and daily on-chain interaction while the price is dumping. Generally speaking, this type of divergence is considered a potentially positive sign for Bitcoin's price action. Now, it's very early to say that, right? We just got the news. Also, it's almost 100% sure that we are going to see daily active addresses drop over the weekend. You see these dips? See these dips every 5 days? Yeah, there's a reason why they're every 5 days. It's the weekend, right? Every weekend we see a dip in Bitcoin's network level activity. So expect to see daily active addresses for BTC drop back down to very low 800,000s over the weekend. It's completely normal. The fact then remains what happens afterwards. So with this level, or sort of with this latest correction, if Bitcoin's price action starts to consolidate, starts not doing much at all, how does the network respond? If it responds strongly, I think it could be, obviously all other fundamentals being the same, it could be a strong signal for a short-term price recovery. If it doesn't, however, then we might be in more of a trouble in the short term. So this is one thing that I wanted to show you guys, all right? Now, it's not the only network level metric that we like to look at. We also like to look at Bitcoin's total daily circulation. So circulation is the amount of unique levels or units of Bitcoin that are being transacted on the blockchain daily. So what I mean by that is, let's say we're looking at here, it says 252,000. Oh, I moved my mouse, sorry. 252,000 Bitcoin have been circulated here on November 18th. So that means that a total amount of 252,000 unique units of BTC have moved on the blockchain daily. Generally speaking, similar to daily active addresses, we do like to see increased sort of strong growth in the amount of general tokens being transmitted on the blockchain network. Now, as you can see, this obviously looks quite bullish, right? Because there's a massive spike in token circulation today. I would take it with a grain of salt. All right. So the reason why this latest spike is a little bit misleading is because it seems like there has been a spike in Bitcoin's age consumed. So that's sort of coinciding with the spike in token circulation. So for those that are not familiar with what age consumed does, it tracks the movement of previously dormant coins. So when a lot of coins that have not moved for a long time are moving on the blockchain, we see a spike in Bitcoin's age consumed, right? So we see it happening here. Sort of like it seems like it preempted the drop, but honestly, I don't think it had much to do with it, mostly because we're not seeing any sort of movements in terms of Bitcoin's exchange flows. So it doesn't seem like this transaction or transactions were from private wallets to exchange wallets. So like early preliminary analysis to me doesn't scream this is sell side pressure. It just seems like somebody moved a lot of bags that have not been moved between addresses for a long time. So this is why you are also seeing a spike in token circulation, simply because a lot of previously dormant coins are starting to move on the network, right? So take it with a grain of salt. That being said, Bitcoin's token circulation, even without this latest uptick, still being like looking very strong. Generally speaking, if we take a 6-month or a yearly view, the total amount of value created on the Bitcoin blockchain continues to grow. And actually, if we look at our NVT ratio, which Brian usually shows on these streams, I can show it a little bit later. The NVT ratio is a metric that basically tracks the dynamic between the market cap of a coin and the amount of unique tokens moving on the network. Because the idea is, all right, if the total market valuation or the capitalization of a coin is too high relative to the total amount of value that is being transmitted on the network daily, then that means that the coin is overvalued in the short term. But if the market capitalization is too low relative to the amount of value being transmitted on the network, that might indicate undervalued conditions. So currently, the NVT ratio for Bitcoin is pretty green, simply because the price is dropping, but the network level activity is not. The network level activity is staying relatively strong. So obviously, this is all early days, but I would say keeping an eye on these two metrics in days to come. Over the weekend, they're almost certainly going to drop. That's a given. But Monday, Tuesday next week, what happens with these metrics? Do they continue to drop? If they do, I would be a little bit concerned about Bitcoin's chances of a strong short-term recovery. However, if they continue to show some strength and maintain this upward momentum, that could be a potential bullish divergence. Obviously, none of this should be considered as financial advice. We're just talking here. We're a couple of buddies, about 100 of us, talking live. But this is what I'm seeing on network level metrics for Bitcoin. All right, now let's move on to some of the things that we've seen specifically, what this latest dump has impacted, like the metrics that this latest dump has impacted for Bitcoin. I think one of the clearest signs is with Bitcoin's net realized profit loss. So this metric tracks the total daily ROI of all daily transactions on the Bitcoin network. So what that means is that we take each unit of Bitcoin that is moving on the blockchain, and for each unit of Bitcoin that moved today, we take the price at which it was last moved. Let's say it moved here. We take the price at which it was moved here, and we assume this was its buy price. And the next time it moves on the blockchain, let's say it moves here, we take the price at which it was moving now, and we assume this was its sell price. So the difference between these two prices on the entire network level for Bitcoin becomes this metric. So big spikes in network profit loss point to periods in time where coins moving on the network are moving at a significant profit relative to the last time they changed addresses. So it could potentially indicate some profit-taking operations. And then when we see these dips in network profit loss, it points to periods in time where the coins moving on the Bitcoin blockchain are moving at significant loss relative to the last time they changed addresses. Now, this big spike in network profit loss, again, It is because of this spike in H consume. It happened at the exact same time. It makes perfect sense. There's a lot of old coins moving on the blockchain that haven't moved for a long time. So obviously there's going to be a big spike in net profit loss because these coins are clearly moving at profit. Like I said, based on exchange metrics, it doesn't seem like this has this transaction or transactions are moving to exchanges. So it's not like it's a clear sign of sell side pressure. I think it's just, it could be, I generally, I don't like to put too much weight on like solitary spikes in H consumed because they could literally mean anything, right? What I do like, however, is that even like, obviously H consumed currently doesn't look like it's moving at all. So it's not like, first of all, we're not seeing any sort of a strong reaction from long-term holders for Bitcoin currently. What we are seeing, however, is that now, similar to this bottom here, and actually similar to this first leg of the correction here, we are seeing a pretty significant dip in Bitcoin's net profit loss. Generally speaking, I like this. So what that seems to suggest is that at these levels today, most of the, or on average, the units of Bitcoin that are moving on the blockchain are moving at a loss relative to the last time they changed addresses. So it's basically suggesting that we are seeing some weak hands selling off. We are seeing some panic start to evolve in the among Bitcoin investors and Bitcoin holders. Generally speaking, we like to see these types of pain markers on the charts when the correction actually happens, because it tells us that we might be looking at potentially oversold conditions and undervalued conditions. It's still early, but we have seen these types of spikes, or sorry, dips back in May. Actually, let me show you. So when I zoom out a bit, okay, I'll zoom it out like this. We have seen these types of massive dips, like capitulation spikes here as well. Generally speaking, we see this not just for Bitcoin, but for a lot of other alts as well. Sometimes these large drops in net profit loss will coincide with local bottoms and at least periods of price consolidation or potential price reversal, simply because if there is enough buy the dip pressure to scoop up this panicky sell side pressure, it could mean there's a directional change potential in days to come. So generally speaking, I like the fact that we are seeing people sort of lose their mind a bit today from a market-wide perspective. We're also seeing this on the blockchain level. So this is another sort of confirmation of the retail side and the general wholesale sentiment toward Bitcoin starting to wane. So another metric that sort of gives us that same vibe, and I'm going to now move slightly into social metrics, but we'll move back or go back to some of the additional on-chain data points that I wanted to show today. So another metric that shows that the sentiment towards Bitcoin seems to be very quickly, disappearing or sort of moving back to bearish is our social sentiment. So there are a few social metrics that we have developed over at Santiment. The way that we have developed them is by tracking mentions of over 1,500 different crypto-related social media channels. So we track mentions of Bitcoin, Ethereum, any coin really, on Telegram, crypto subreddits, crypto Twitter accounts, any place where within social media where the main topics of discussions are cryptocurrencies. And so we use this data to create a bunch of different metrics. The metric that I wanted to show, and I actually use it as a thumbnail for this video, is weighted sentiment towards Bitcoin. So what is weighted sentiment? It's essentially a metric that tries to calculate the average bias towards Bitcoin based on its mentions that we collect on crypto social media. So we take all of these, we collect over 100,000 messages daily, right? Text messages. So we take all of the messages that have mentions of BTC or Bitcoin or any of its synonyms, we take them and we parse them through a machine learning algorithm. And so that algorithm labels the messages as either positive, negative, or neutral / ambivalent, right? So the end result is this chart. When we see big spikes in weighted sentiment like this one or this one or this one, that means that on average, the crowd seems to be very bullish on BTC, predominantly bullish. However, when we see these drops, on average, that means that the general bias on crypto social media, so the retail bias towards Bitcoin, is moving more and more towards a bearish atmosphere. So after a while, for the first time since really the start of the month, we are seeing with this latest correction, we are seeing Bitcoin sentiment really start to draw back into a negative zone. In fact, we are the lowest that we've been since, what is this? October 3rd. Okay, so almost 2 months, right? So let's say a 50-day low in Bitcoin's average sentiment. Generally speaking, I think it's a very strong departure from where the crowd was a couple of weeks ago, especially when the correction started. So when the correction started, we actually saw a massive amount of hype around the possibility of Bitcoin recovering, and a lot of people wanting to buy the dip, being very excited about the opportunity to buy Bitcoin at a discount. Generally speaking, the retail sector was quite happy about the correction because they thought it was just a short-term blip and we're gonna, bounce back up immediately. So this, to us, and I think we talked about it at the time, was a pretty concerning signal that the crowd is still very overhyped, overhyping the coin, overhyping the market, and we might be due for some longer correction or a sustained neutralization of these metrics, right? So this is what's been happening over the last couple of weeks. These metrics have been resetting back to where we would like them to be, which is negative, bearish, very sort of anxious levels. Generally, we've done some analyses and backtests on our social metrics, and what we found is that when the social chatter towards a coin is high, and when the social sentiment towards a coin is high, especially if that coin is pumping, but in whatever case, those bullish sentiment spikes can be fairly detrimental to a coin's price action, more often than not. So obviously there's no sort of magic bullet, but on the whole, as a rule of thumb, we prefer to see these levels of activity and these levels of sentiment where people are very scared about the future potential of a coin, than seeing these types of spikes, which would suggest that on average, the average Joe retail trader is very, very, very happy about BTC. All right. So that's why every now and again we do require some corrections along the way for us to flush out the euphoria from the market and move it back to a very sort of concerned level of activity in order for us to have a sustained recovery. Like you see the same thing happening here, right? After the May correction, there were a few large sort of spikes in sentiment, people looking to buy the dip. I think this was when El Salvador adopted Bitcoin as legal tender. Yeah, it was June 9th, right? So generally speaking, there were a few sort of bullish news, and generally the people were very, very happy about Bitcoin correcting. But it wasn't until nobody was really happy about BTC anymore, and we were talking about, Bitcoin fell below 30K here for a minute. Nobody talked about Bitcoin recovering, or at least on average, the people were very concerned. It wasn't until we reached these levels that we were able to start recovering. So this is, again, very early days, but early signs of the retail sector completely losing faith in Bitcoin. We have to wait a little bit more. Like, I would still prefer this to be a more sustained drop, not just like a short-term blip and then over the weekend we go back up. So I would keep an eye on this chart. I would like us to have at least sort of 4 or 5 days of sort of bearish undertones on average for BTC before I could say, okay, it seems like the crowd has been completely, they lost all hope. Right? That would sort of show blood on the streets really for me. For now, it's good. We're moving in the right direction, but we're not there yet. Now, the one thing that I thought was still concerning is if we look at the derivatives data for Bitcoin, there we still see some sort of layers of bullish sentiment towards BTC, which, kind of sucks because it's generally or typically not a great sign. So let me see if I can show it to you guys here. Yeah, there we go. So this is Binance, right? This is the funding rate for Bitcoin on Binance. So the funding rate is the fee paid by one side of the perpetual contract to the other. Very simply put, when the funding rate is high or grows, that means that on average, Bitcoin longs are paying Bitcoin shorts, and the market is bullish or long on average. And then on the other side of the aisle, when the funding rates are low, like they were here, that means that on average, shorts are paying longs and the market is bearish on average. So this is not just Binance. I have seen this same type of spike in funding rates today on Huobi, on OKX, on Bybit. Like, there are a few other exchanges that are now starting to see slight but still relatively interesting spikes in funding rates. It seems like some people are longing Bitcoin once again. Let me see if we can see that on FTX as well. No, on FTX is still relatively low. So it's just, like I said, Binance, OKX, Huobi, and the Bybit, I believe, the four that I saw it on. So generally speaking, it is still quite early, but I would actually much prefer us to be at these levels, right? I would actually much prefer this drop in Bitcoin's price action to prompt a lot of long liquidations, which it did, by the way. There were a lot of, I think, around 700 million liquidations, long liquidations today. But even with that sort of a massive amount of liquidations, longs are prevailing. So I would like us to see move back to these very low levels of funding rates or negative funding rates that we weren't at for like almost 2 months now. So here, it's similar to social sentiment, this metric, really. The lower that it gets, the more scared the people are. Except this one shows us what the derivative traders are doing, and the social sentiment metric shows us what the retail crowd is doing or how the retail crowd is feeling. So on the retail side, we're really now starting to see FUD and panic. On the derivative side, not yet. I would like us to see a consensus on all of these metrics. For now, we're just not. All right. So, keep an eye on these metrics in the next couple of days. I would not be totally convinced of a recovery until I see us move back into a negative direction. Max, you wanted to say something?
No, yeah, maybe we can connect because there was also someone asking in the chat if we can show what whales are doing. Yes. And I think that will be like third group here.
Yes. So I've got, actually, yeah, let's look at whales first, and then we'll look at MVRV, because I think both of those are very important. And then I'm going to start taking questions. So we're going to talk about the
wait, not yet questions. So I think it's also good. We didn't prepare, but let's maybe browse around whatever we have on stablecoins if we see some patterns there.
Okay.
There was very nice discussion. Yeah, there was very nice discussions in the chat, and I was thinking about the same just today. It would be so cool to have flow diagram if we have whole supply of stablecoins, and we see if they're flowing into different like liquidity, almost zero risk pools like on Curve or Uniswap, or if they're being channeled to buy something on DeFi protocols, at least this, or they're being channeled to flow to centralized exchanges. Or if I can see, and you see like like a flow diagram, and you see also a time series when we can distinguish what happened, I don't know, like 1 month ago when we were dumping or pumping last time, and what's happening now. But anyway, and there was similar question now in the chat, and I think, well, we don't have yet what we wish we had, but we have some other things. So maybe after we covered whales, let's check what we have on stable coins.
Sure. I mean, I looked at the stablecoin exchange inflow before the call. It didn't look like there's a little bit of a spike in USDT. Everything else is pretty flat, but we can take a look. All right, let me do whales next. All right, so these are the two groups of addresses that we typically, at Santiment here at least, look at when we say whales. So for Bitcoin, right? So what you're seeing here right now, and I'm going to zoom in, don't worry. We are looking at the total amount of Bitcoin that is being held by addresses holding between 100 and 10,000 BTC. So it's a very sort of large spectrum of addresses, but they're all millionaire addresses. They're all very large, wealthy holders of Bitcoin, right? Generally, I exclude any addresses that hold more than 10,000 BTC because there's only 84 of them at the moment, and they're most likely sort of large centralized exchange wallets. So I don't want to dilute the fidelity or reliability of this data by putting in a bunch of wallets that probably belong to exchanges. So for me, personally, these two groups of addresses typically are a pretty good gauge of what the average whale feels like. So we are currently looking at the total amount of Bitcoin held by these addresses, right? At the moment, they hold 49.24% of total Bitcoin circulating supply. So basically almost half of all Bitcoin is held by these whales, just so you can kind of get a sense of how distributed Bitcoin is. So if I zoom in a bit, this is what we see. Actually, I'll zoom into the last 3 months because, yeah, it's looking like a nice chart, right? So over the past week or so, we have seen for the first time in really quite a while, in a month.
Isn't it good?
We are seeing some signs of accumulation by these large addresses. All right.
Yeah,
So
they like buying the dips.
they do indeed. So I'm going to show you how much that is in actual numbers. For those of you that don't like percentages. So you can change from percents to absolutes, and we merge these two groups again. So, okay, what was Monday? It was like the 18th or something. Let's say from here, it doesn't matter. From 9.22 to 9.29 million. So that's 70,000 Bitcoin that's been accumulated or added to the combined balance of these addresses in the last like 10 days or 9 days. That's pretty strong. No doubt about it. And it seems like they are also starting to, they've also done maybe another, like 20,000 Bitcoin just today in response maybe to this dump. So generally speaking, large addresses as a conglomerate seem to be now moving back to more of an accumulation period. So is this good or bad for BTC? I mean, generally speaking, in the past, it has been a pretty decent signal for Bitcoin, a pretty good signal for Bitcoin, I mean. So let me zoom out a bit. So let's say between October and April, October 2020, April 2021, we've seen a very strong uptick in the total balance of these addresses. Sort of went hand in hand with this idea that the January and February or sort of early 2021 rally was because institutional interest was growing. So we can see this in on-chain data by looking at these large addresses and their total balance, which has really been increasing. So there is some sort of on-chain proof that institutional interest in Bitcoin has been growing throughout this part. There have also been like a few short-term offloading events around local tops, like here and here and here. Each of these is like 50 or 60,000 Bitcoin being dumped by large addresses in a span of a couple of days. And sometimes that seems to coincide with local corrections. But generally speaking, the trends seem to be pretty reliable. So here we see an accumulation trend, and then from the all-time high, even before the May correction, we are seeing the beginning of offloading period for Bitcoin among Bitcoin whales. And it wasn't really until we started consolidating here in early June that we saw the accumulation spree, or sort of the trend move back to accumulation. Now, what was concerning for me, and I mean, we talked about this a couple of weeks now, was this trend. So even though Bitcoin for a very short while, blew past this top and, hit a new all-time high for a short while. The large addresses have not shown us signs of confidence. Not at all. Actually, this is like, I think 120,000 Bitcoin that they've dumped in like 3 weeks, even though Bitcoin was recovering. So generally speaking, I would prefer, especially when it comes to these periods of correction and price consolidation for large coins, I would definitely prefer this sort of upward momentum to this downward momentum. Now, keep in mind, obviously, that this is a very large conglomerate of addresses, so we're not tracking what each of these addresses are doing or where this money is going. But as a whole, these large addresses seem to be inflating their combined holdings. So, do with that information as you will. It's been a couple of days now. I think it's fair to say this is now a trend. 10 days, I think that makes it a trend, at least in the swing trading community. So, yeah, keep that in mind. I don't know. Looks okay. Like I said, there are some decent signals for Bitcoin, even with this correction. Now, let's do MVRV, and then we'll look at stablecoins, and then we'll ask questions. Or you'll ask questions, and we'll answer questions. All right. So let me take the last 3 years of data. Also take a sip of water so that I don't get totally out of breath and lose my voice. All right. So for people that don't know what MVRV is, let me give you a very short introduction. MVRV is an on-chain metric that tries to visualize the average profit or the average loss of a group of addresses. So the 30-day MVRV ratio that we are looking at right now shows the average profit or the average loss of all addresses that have acquired Bitcoin in the previous 30 days from any point on the map, right? So let me zoom in a bit. Yeah, there we go. So at the moment, Bitcoin's 30-day MVRV is minus 9%. It was actually minus 10% a couple of hours ago. It was the first time that it hit double digits in like a month, so I was pretty excited about that. It's minus 9 right now, which means that on average, all addresses that have acquired Bitcoin in the previous 30 days are now down 9% to their initial investment. This is obviously based on on-chain data, so it's not a completely accurate representation of the total profits or average profits of all Bitcoin holders, but it's a pretty good gauge of where short-term holders are right now. They're down about 10% on their initial investment. All right. So how do people use this metric? So generally speaking, the higher the MVRV ratio gets, the more unrealized profits there are, or unclaimed profits there are. So as a result, the more likely it is that these holders start taking profits, and as a result, applying sell side pressure to the market and dumping the price potentially in the process. So generally speaking, these high levels of MVRV, like here and here and here and here, these high levels of MVRV can point to overvalued conditions. So the higher the MVRV, the more risky it can be to enter into a trade. And then the lower the MVRV ratio, according to some analysts, the more opportune time it can be to accumulate BTC or any coin, right? So historically speaking, Bitcoin's 30-day MVRV seem to be in a danger zone when it goes or hits between plus 15 and plus 20%. So I talk about this very often. It seems like between plus 15 and plus 20% is when swing traders, short-term Bitcoin traders, like to take some profits off the table and like to dump on the market a bit. So generally speaking, yeah, there have been a few outliers where Bitcoin's MVRV has gone to as high as 40%, but that never lasts for longer than a couple of days. And in general, it's a very good sign that we are massively overvalued and this rally is unsustainable, like we saw back in January, right? So yeah, even with outliers, I would say anytime that we go above 15 or 20%, it's a potentially concerning sign for Bitcoin's short-term price action. Now, on the other hand, we do see sort of a potential support level around minus 15%. We also see another one around minus 25%, but the one that we are getting close to is minus 15. So, I mean, I can draw a line here and show you guys. Boom. Boom, maybe. There we go. So this is sort of the level that we have hit several times in the past and sort of bounced back off of. Around minus 15% seems to be historically a pretty significant level, and we are slowly approaching it. A potential bounce back zone for Bitcoin according to on-chain data. So generally speaking, I talked about this on previous streams when Bitcoin's MVRV was around 0% or sort of minus 2%. We said we would like it to be lower. Sort of to really tell us the market is in pain and that we are moving back into this undervalued territory. Well, now we're moving into that undervalued territory. We're not there yet, but we're pretty damn close to it. So another leg down would probably put this into this minus 15% zone. And then from there, historically, we haven't really seen too much further downtrend before a short-term recovery is due, right? Obviously, past performance, not always indicative of future results, so take it all with a grain of salt. But this is how on-chain analysts use MVRV in particular. Now, this is obviously from a short-term perspective, this is looking pretty exciting, right? I will, however, say that you should temper your expectations because from a long-term perspective, the long-term holders of Bitcoin, which we can see on Bitcoin's 365-day MVRV ratio, they are still massively in profit. I mean, not really massively anymore, but they're still like plus 15% in profit, which is, it's still high. They have some profits that they can still take off the table and dump on the market if they believe the market is in a position of high volatility and might experience further correction. So generally, we still have some ways to go on a long-term scale, but this is a very macro level indicator before we can really say we're in the undervalued zone. From a swing trading perspective, I mean, this chart to me looks pretty decent. All right. I'm going to answer some other Bitcoin questions if you guys have them in chat, but let's look at stable coins and then we can move to questions about other coins. So Max, any suggestion on where we should start in terms of stable coin metrics? Is Max here?
Yeah, sorry, I was answering in the chat.
Okay.
Actually, interesting would be to see our stablecoin charts from DAI. Yeah, if we increase in depth or decrease in.
Okay. Right,
usually we don't share it because it's a kind of hidden
we don't.
gem. And well, gem, and we will see when you see design. But it has a lot of very deep data.
Yeah. So I looked at these charts with Gary a few hours ago. Let's
something?
There was a little bit of something. Yeah. So let's talk about, first of all, guys, what you're seeing here. If you have a Sandbase Pro account, there's sort of an Easter egg, a hidden part of the platform, which is freely available. And we integrated some of it on Sandbase, but if you want to see all of it in a single package, you can go to graphs.santiment.net/MakerDAO, and you'll see a bunch of metrics specifically about the MakerDAO ecosystem, right? That we created in collaboration with the MakerDAO risk team almost 2 years now. So there are a few metrics that Max here, he likes to look at every day, and a few other people in team actually like to look at them on a daily basis when they rebalance their portfolio, those that actively trade, right? In particular, the couple of metrics that they really like to look at are these: the amount of wrapped BTC locked in CDPs, as well as the total debt in MakerDAO CDPs, and then debt created and the amount of liquidations. So there's 4 metrics. Some of you that have no idea about MakerDAO this might all just be blowing past you. So let me try and explain. Let's start with the first metric. The amount of wrapped BTC locked in CDPs. So essentially, in MakerDAO, you can deposit various cryptocurrencies as collateral to borrow DAI or to mint and get new DAI, right? So one of the collaterals that you can post is wrapped Bitcoin. You take Bitcoin, you wrap it, put it on the Ethereum blockchain, you put it in a MakerDAO CDP, and you take DAI from it. So the reason why we like looking at this chart or observing this chart is that sometimes when people put a lot of new wrapped Bitcoin into CDPs, it can point to a desire of DeFi participants to go double long on Bitcoin. Because what you can do is you can put wrapped BTC into CDPs, get DAI from it, and then you can take that DAI and go back and buy more Bitcoin. So if you really believe that Bitcoin is set to, keep growing or recover, whatever the current market conditions are, you can sort of go double long on BTC at this point with this method. So generally, when we see these large spikes in the amount of wrapped Bitcoin locked in CDPs, it does point to a very leveraged market and a very bullish market. And it's not a sign that we are a fan of. Generally, we would actually like it to be at these levels, like either flat or declining. So we have seen, by the way, Max, we can still hear you typing, just so you know. You might want to mute yourself.
Oh, sorry.
No problem. So you can see that between the beginning of October and the middle of November, there has been a massive spike in wrapped Bitcoin in CDPs. This is like, we've gone from like 17K to 43K. So that's like what? More than double, I don't know, like 100 and...
Almost 3 times.
Yeah, almost, yeah. Massive spike.
This is a confidence level, yeah?
Absolutely. So this is the level that we see from DeFi participants in particular, where they were very, very confident about Bitcoin's potential. They were more than happy to, put their BTC to rest in their CDPs and take out more DAI to move back into the market more than likely, right? And then we've seen another sort of spike here, suggesting that even as Bitcoin started to correct, some people were looking to go possibly leverage long, double long on BTC. And then now, finally, after a while, for the last couple of days, maybe a week, the total amount of wrapped Bitcoin in CDPs has flattened out. In fact, not only flattened out, it's actually dipped a little bit. So it's early days, but at the very least, it's another sign that maybe, finally, people are starting to lose a little bit of hope in the Bitcoin on the whole. And so this chart, shows the total amount of debt that is accrued in MakerDAO CDPs. So total amount of debt means all of the different collaterals put together, how much DAI has been extracted from the CDPs, right? So it's not just with the WBTC being used as collateral, but all other coins that can be used in MakerDAO as a collateral. So generally speaking, we're obviously seeing the same trend. However, really for the last 2 weeks or 20 days almost, the total amount of debt created by the MakerDAO system has completely plateaued / flattened out, suggesting, similar to the above chart, we might be finally moving away from these over-leveraged, sentiment, over-leveraged vibes and into more of a concerning or concerned, ecosystem or atmosphere.
Here's interesting thing. Wait, don't move from this chat.
Sure.
Look how in July 2021, when we coming out of end of May correction and early October 2021, just as last dump was happening, amount of debt decreased. And I think it's coincided with liquidations, most likely. No, go left. Don't move up.
Sorry, I was reading chat. So where did you want me to, here?
No, I mean this chart, and every time before we really build the bottom, amount of debt decreased.
Like here.
Here it drops down, go back to July, go to the left, you will see the same.
Here.
Yes. So I think it coincides with liquidations, most likely. Maybe small part people pay back because they're concerned that they will be liquidated. I don't know. But I would look for it. If you really want to play safe, just wait till some decrease the leverage happens. And this is a good sign. In July, if you would enter, you would still have to wait like 2 weeks to mark really start pumping up. In October, it was faster. I think you would have to be patient like 5 days maybe. So it depends. But once you see it, you are on the more safe side. As long as the amount of debt is the same. It's not Fed, where they can keep building debt.
Right.
Crypto space is very fair and still not filled with junk. It should deleverage on every cycle, even small ones. So it's a very interesting chart. I like it.
All right, let's look at the last chart that we wanted to, because it's already like we're 50 minutes in. Sorry, guys, I'm terrible with time management when I'm also talking at the same time. So the last chart that we wanted to show here is the amount of liquidations. So how many people are getting liquidated within the MakerDAO system. So this is very much more understandable for anyone that's doing margin trading. You know what liquidations are like. So it's kind of the same thing as when you're seeing longs being liquidated, right? The idea here is how many of these, of people that have posted collateral are now seeing their debt being, or sort of their collaterals being liquidated because their CDPs have been under collateralized because the market has dumped. So generally, we have seen several times in the past these large spikes in liquidations occur around local price tops for Bitcoin and Ethereum in particular. Now, like I said, there has been this spike yesterday, I believe. No, actually a couple of days ago, has been this spike in liquidations, but I wouldn't actually give too much power to it. The reason why is because if you see what has been liquidated, it's mostly BAT, basic attention token. And the reason why I think we saw some liquidations in BAT is because BAT has had a very volatile price action recently. So let me show you. Yeah, so this is BAT. And this is what BAT looks like right now. So it could just be that we have seen, somebody has posted collateral while BAT was pumping, maybe wanting to go double long. And then we saw sort of I think this is maybe like a 20% drop in BAT's price action in like 2 hours. So somebody got liquidated a little bit. So it's not like a network-wide or sort of, market-wide liquidation effort. It's mostly just a few unfortunate BAT holders. As far as those that have put wrapped BTC and wrapped Ethereum as collateral, we're still not seeing them being liquidated. So this is one of those like pain markers that we really look for in the market when the market is correcting. We like to see a lot of people sort of feeling the burn and feeling the market kicking them in the nuts, for lack of a better word. For now,
yes,
it's
like what we say, the guts of the crypto market. They need
blood. Blood
They need
sacrifice.
blood. They need sacrifice. Yeah, you cannot go along with it. Oh, you cannot avoid it. Yeah.
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 So this is what we're seeing, or actually we're not seeing yet. So similar to derivatives, people that are still going long, right here in the last 24 hours, we're also not seeing a whole lot of liquidations within the MakerDAO's ecosystem. I think if we like drop down to like 50K, we're probably gonna see these sort of pain spikes very, very quickly. But for now, we're just not seeing them. So this might be another sort of, if you're looking for potential bottom indicators, this could be one to keep an eye on. For now, we're just not seeing a whole lot of activity here. All right, I believe we need to move into questions. So people, chat, what coins do you want me and Max to look into? So we talked about Bitcoin a lot. We are already 50 minutes in, so we're not going to have a whole lot of time. Maybe one, maybe two coins, but okay, you already put the questions in chat. All right, great. So we can then look at ETH, and if there's any additional coins that you guys want us to look into, type them in chat. We'll sort of see which coins are being the most discussed or most wanted, and we'll try to do some very quick analysis. But this is what Bitcoin has been looking like. Let's move back to ETH now.
This is actually quite unusual choice. I think it's the first time in memory people pick up ETH.
There was once before, but usually people like us to like, I don't know, sometimes they will ask us about Cardano and Polkadot, and then sometimes they'll ask us about a coin that I've never heard of. But yeah, usually ETH, but we try to cover ETH every now and again, so maybe that's the reason why.
Right, yeah.
You know. All right, let's do first of all, let's do general Ethereum analytics. So you see how I talked about Bitcoin's daily active addresses and how, you know, compared to where the market is, they're at least showing some signs of strength. Unfortunately, Ethereum's not, for just lack of a better word. So the amount of unique addresses interacting with Ethereum on a daily basis is continuing to decline. So let me zoom in a bit so we can track how much it's declining. So let's say from, I think this is fair, from November 10th to now, we are seeing an 11% drop in daily active addresses, between 11 and sort of 12%. So generally speaking, the amount of unique addresses sending or receiving Ethereum on a daily basis has declined alongside its sort of price volatility. Now, there is one interesting tidbit to this, which is that the amount of new addresses that are interacting with Ethereum seem to be still growing today. So I saw this before the call. Look at this. So network growth is the amount of addresses that are interacting with Ethereum for the first time. And they are growing. So I'm not exactly sure still how to explain it. But while daily active addresses on the whole are declining, in particular, the new addresses interacting with Ethereum are actually showing some signs of life. So yeah, we'll have to see how consistent or sustainable this is. But generally speaking, I would be concerned as long as Ethereum's daily active addresses and on-chain activity looks like this. Now, one of the also concerning indicators is that we are seeing daily active addresses drop, even though fees are now, I mean, I'll say much lower for sure, even though they're still like relatively very high. $25 on average is still a massive amount of money.
You can take medium fees. I think that I always like to watch both of them.
Let's do that. Sure. Median fees are currently $10.
Okay.
Yeah, but that's median. That's you take the middle value between like very large, right? Either way, I mean,
high.
Yeah. Either way, it's still very high. Generally speaking, the fact that that Ethereum's daily active addresses are finding it hard to rebound, even though the price to admission is getting lower, I think is a little bit concerning, right? So there's obviously a lot of small ROI transactions that are going to be priced out with large fees. So you expect to see daily active addresses decline when fees are large or high, but when fees drop, like for example we've seen here, it would be a decent sign to see if the network is still strong. It would be a decent sign to see some network activity start to come back, right? at the moment, we're not seeing it. So generally, for now, the Ethereum network level activity is staying relatively flat to declining or plateauing. I would like it to do something similar to what Bitcoin's doing, show us some signs of life, some signs of recovery. For now, it is simply not. Now, as far as exchange level metrics, let's see if there's anything in terms of additional sell side pressure for Ethereum. So we can start with daily active deposits. Daily deposits are addresses that are being used to funnel Ethereum to known exchange wallets, centralized exchange wallets. So generally speaking, when you see a spike in daily active deposits, like we've seen here, for instance, what that indicates is that more addresses are being used or actively used to transfer Ethereum to exchanges. And then the question is, well, why? The answer is probably to sell, right? So the assumption is when active deposits are rising, more people are looking to sell Ethereum. So there's a spike in sell-side pressure. Since this spike in active deposits, Ethereum's active deposits have actually been relatively flat. We have seen some increased deposit activity around this top here, a little bit around here, and now we are seeing it start to grow once again, but actually it's still relatively low, right? I would actually expect to see much higher a much stronger spike in deposit activity around either tops or bottoms. So generally speaking, let me explain how I like to look at this chart or this metric. So spikes in deposits, in my experience, they can occur both at tops and at bottoms, right? So they can occur both in tops and at bottoms, tops and at bottoms. So the reason why I think this is the case, at least this is the behavioral theory that I have, is that around local top. So while the price is pumping, when you see spikes in deposit and exchange related activity, right? When you see spikes in exchange inflow, in the active deposits, all of these metrics that tell us a lot of people seem to be selling. It's going to be difficult for Ethereum bulls to absorb that sell side pressure because they would be happy to buy Ethereum at a premium because Ethereum is pumping, so they would need to be completely okay with absorbing sell side pressure while Ethereum is pumping. That's not a lot of people want to do that. And then on the other side of the equation, when Ethereum is declining in its price, and we see a lot of spikes in deposits, that seems to suggest not profit taking, but capitulation. It seems to suggest a lot of weak hands moving out of the market because they're fearing further corrections. And then if there's a lot of people looking to buy the dip or scoop up that sell side pressure at a discount, then that sell side pressure can be much more easily absorbed. So that's why I actually like to see spikes in daily deposits, spikes in exchange inflow, spikes in like sell-offs, short-term sell-offs around while the price of a coin is dropping. Currently, I mean, we're actually not seeing that much. If I look at exchange inflow for Ethereum, it's the same image. Like, you're just not seeing a whole lot. See how around several local bottoms we saw spikes in exchange inflow, suggesting that people were panic selling? Yeah, that happens. Now it's just flat for now at least.
You're right. Yeah, there is no panic in the market.
Yeah. Currently,
neither on derivatives, nor here, it's not panic. So the question, of course, is the market wants to push to panic, but I don't like to buy personally when there is no panic. Of course, when there is a panic, it's difficult to buy, but at least if you do, you limit your risk.
Yeah.
But I agree with you. How you say it.
There's just not a whole lot of panic, not a whole lot of concern, and if there's not a whole lot of concern, you're basically buying into a lot of very excited individuals. So you need to decide for yourself whether that's something that you want to gamble with. And then if we look at Ethereum's social metrics, you'll actually, I think, see let me check because I also want to check it here because this is showing that we're now moving into a negative territory for Ethereum, but I saw a minute ago that we were still slightly bullish on Ethereum. So maybe there's something changed in the last hour while I was talking. Let me check it here. Because I think this gets updated a little bit sooner than the other chart. It's the same chart. The difference is just in when it gets updated. Yeah, okay. So it's actually dipped a little bit more. So when I was looking at the chart, it was like here. And I was like, oh, okay. So Ethereum is still pretty high, the sentiment towards Ethereum. You can see this sort of Eiffel Tower of bullishness around Ethereum's all-time high. Yeah, I mean, like I said, high bullish sentiment sometimes will coincide with the periods of price correction or consolidation. So it seems like in the past couple of hours, as the market tumbled, we are seeing a whole lot of negativity towards Ethereum. Now here we're actually still slightly bullish. So we're nowhere near these levels, so we're still not panicking, right? The Ethereum sentiment is still slightly bullish to, let's say, neutral even, but we're not in a position where people are all out giving up on Ethereum, calling it a scam, thinking that layer 2 will never come, blah, 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 right? Sorry, ETH 2.0. So we're still not at those levels of self-defeatism and general panicking on the streets. Similar to what we're seeing on the exchange-related charts. There's just not a whole lot of depression in the market. With that being said, I would like us to drop lower. I would like us to drop lower in sentiment, and I would like us to see some type of panic on Ethereum's exchange-related charts. For now, we're just not seeing it, so it's a little bit of a concern still, and there might be a room for further price depreciation. If we look at the MVRV for Ethereum, it is, however, quite low, right? So let me look at the last 3 years, just to give you a better sense of where we are right now. Okay, there we are, minus 8%. Generally speaking, Ethereum's support levels are around minus 17% and another one around minus 30%. So yeah, we've got still some ways to go before we hit historical sort of bounce back or opportunity zones. And then when we look at long-term MVRV for Ethereum, it's still very high. So like I said, this is a very macro indicator, so you keep taking it with a grain of salt. It doesn't mean that we can't recover in the short term, but long term wise, all addresses that have acquired Ethereum in the last year are still like almost 50% in profit. So there's a whole lot of bags sitting on the sidelines that they can still dump on your head if they want to, right? So generally speaking, from a long-term perspective, yeah, we're still overvalued. So I wouldn't be like, as long as this chart is not here, I am not going to be surprised if we see further corrections, right? But this is, like I said, a very macro view of the market. So it doesn't mean anything as far as where we can go in the next like 1, 2, 3 weeks, right? Even up to New Year's. So, and then if we look at derivatives, let's see what derivatives are looking like right now for Ethereum. Same thing. See that spike here? That spike means I go bullish on Ethereum. Somebody said on Binance right now, as we were talking.
Might be feeling not good now.
Yeah. So I think another sign that the panic state or sort of the sentiment of the market is still not at a panic level is the fact that we're seeing people go long. Let's look at FTX. FTX, whoa, okay. Well, this is what I would like to see on most exchanges, actually. When I was looking at it, it was here last time. So now it's dropped to negative for the first time in quite a while. What about BitMEX? Yeah, BitMEX is also growing. Like I said, so Binance, Huobi, OKX, Bybit, BitMEX, those are the exchanges that I see today see increases in their funding rates. FTX has been pretty low for the last couple of days, but it's not, obviously it's a far from a bearish consensus to say the least. Like some exchanges, high volume exchanges, are seeing increase in funding rates today, meaning that, degens are going long. Apes are aping back into the market thinking that we're going to recover. So whether you want to bet on that is up to you. So I think, what time is it? Yeah, we're already 5 minutes past. Max, do we have another coin that people want us to look into? Because I would like to spend some time on at least one more coin before we end it.
Bent, I think there was something. I remember we discussed Bent this coming week, if I'm not mistaken.
BND?
I guess.
Bend?
Yeah, Bend. I think they are coming something. Correct, Max. Yes, there was some request for Bent.
Okay, I mean.
Oh, wait. Bent or BNC? Because BNC are publishing something. For Bent, I don't know.
BNC, you mean Banker?
No, yeah, this is the one which we covered, and then there was a band protocol. Which one, Mark?
For the one that I'm sharing right now. Okay, good. Okay.
The chart looks weak, but okay, let's see the metrics.
I think the metrics look weak also. We had some requests for band a couple of weeks ago, and it was, from what I remember, it was not looking good. But let's see. So the last thing that I remember about band was that they were supposed to release some sort of like smart money alpha initiative a couple of weeks back, and I think Max Bartel, you told me that that was live, or that went live, and since then I have no idea what's been happening with the project. But let's look at what its onchain metrics are looking like. Yeah, so this is what I meant when I said its metrics weren't looking all that hot. The amount of total activity on the band network is not looking great. I mean, we are seeing some spikes today, but who knows what this is about. I mean, I think it's far from certain that this is a beginning of like a large spike in active addresses or whatever. Generally speaking, it seems like we have found a new normal for band's total daily active addresses around 170, which honestly, like in a grand scheme of things, it's not that bad, but it's not great. Like it would probably put it in the top, I don't know, 40 or 50 ERC20 coins. There are definitely a multitude of coins on the Ethereum network that have much higher and stronger network activity on a daily basis. Also, you just have to look at the trends, right? It's not like we're seeing a whole lot of network effect in band in the short term. So we are actually seeing a pretty consistent decline in the total amount of interest in the coin, speculative and otherwise, on a daily basis. From a network perspective, on-chain perspective, there's just less addresses interacting with band today than they have last year at this time. So, you know, take that for what you will. All right, let's look at the exchange metrics for band. I'm curious to see what they look like. Let's look at active deposits as well. All right, I mean, okay, let me zoom in.
Quiet.
Yeah, it's pretty quiet. It's nothing crazy happening. What's supply and exchanges looking like? Yeah, it's also just meandering, since here we're seeing supply and exchanges sort of, you know, plateau around like between 9.4 and 9.9 percent. But yeah, I mean, it's I don't know, it doesn't seem like they are doing much, either selling or accumulating. Engine flow is fairly low. Active deposits are, yeah, just normal amount of activity. I mean, okay. What I will say is that on the whole, when you see sort of rising levels of supply on exchanges, that can typically coincide with periods of price depreciation. So, you know, when there's more and more of a coin available on exchanges, assuming there's unchanged demand, it could sort of lead to a deflation of the coin's price action in the short term. So we do sometimes see sort of large spikes or sort of consistent spikes in the supply of a coin on exchanges coincide with the coin's depreciation in terms of price action. But we also see the other way around. Like if a coin's price action, if the supply on exchanges drops, like maybe here, we do sometimes see periods where its price action will increase. So usually it's sort of an inverse correlation between these two charts. At the moment, though, it seems like it's just sort of staying in the middle of the road. Let's look at the MVRV for band. Here we go. All right. I mean, yeah, it's looking great. Let's see. Minus 16%. So generally speaking, it seems like we are pretty low. Not still at historical lows, which are about minus 35 to minus 40%, but we are, you know, getting there. The problem is, like, MVRV works as an undervalued indicator only if other metrics are strong, right? So, like, this basically tells there's a potential for band to be undervalued because a lot of people are underwater or below break even. So if we assume that network level metrics are good, like on-chain activity is growing, we're seeing a whole lot of interest in the coin, then this would point to undervalued conditions. Unfortunately for band right now, I'm not seeing that other side of the aisle, right? That other side of the equation. I'm seeing this pointing to potentially undervalued conditions, but I'm not seeing a whole lot of interest in the coin from a network perspective. So, keep that in mind. Let's see actually development activity for band. I wonder how actively the project is working. Okay. Ouch. All right. So this is development activity. Development activity is a metric that we track. We calculate it by tracking public GitHub repos of thousands of crypto projects. So essentially what we do here is we track the amount of activity on band's public GitHub repository. We filter out any noise, like we cancel or filter out any non-development related events like stars, comments on code, whatever is not connected to actual development activity. We scrape it off. So we try to level the playing field and only take into account activity on the public GitHub repositories that are related to new development in the project. So development activity is sort of a long-term indicator of how active is a project from a code pushing perspective. Like, is the team still committed to pushing code, to polishing its features, maybe introducing new features, generally building out the product that they promised and staying true to their roadmap. So I don't know whether whether band has maybe moved their public GitHub repositories. I don't want to say anything without being 100% sure, but the trend seems to be moving in the opposite direction from where it's supposed to move to. Generally speaking, we do like to see sort of an increase or a growth in development activity, regardless of its price action, because that typically means that the team does not care about market conditions and it's just committed to pushing code. So at least based on the data that we are collecting from band's GitHub repository, it seems like it's in a little bit of a slump, at least trend-wise. It can mean several different things. Like, it can mean that we're not tracking full data. It can mean that they have moved their public GitHub repos. Who knows? But just based on pure data that we have, the trend is not looking great either. Yeah. All right. Should we look at whales? Let's look at whales before we end. All right, let's do one more and then we end it for today, guys. I know some of you are celebrating Thanksgiving, so you should get back to that turkey as soon as possible. All right, let's look at the price of BAN. So we're probably going to be looking at these two groups of addresses, maybe this one as well. So 100 to 1,000, 1,000 to 10,000. All right, let's combine these two and see what the actual. All right, well, let's see which groups are. Which groups are. So let me take out the Telegram here. So this is the 100,000, 1,000 to 10,000 group of band holders. This is the yellow one is 10,000 to 100,000, and the blue one is 100 to 1,000. So currently the price of band is what? $7. Okay, so these aren't whales then. I think we can actually start with this group. These would be whales, right? 10,000 and above, yeah. All right, so 10,000 and maybe 100,000. So those holding between 10,000 and 100,000 bands, so those would be sort of semi-whales. Currently, they seem to be acquiring a little bit more bands than in the days past. So maybe a little bit of a accumulation trend, but overall, just still feels fairly weak. And then 100,000 to a million band holders. Seems like how many addresses are there that have this much band? I would assume not many. Yeah, just 44. Yeah, because it seems like very stiff like rebalancing. It doesn't seem organic or very active at all. So might be some exchange addresses or like team wallets or whatever, but it doesn't seem to be a whole lot of activity. So it's probably then these guys that are most indicative of the actual whale sentiment towards Band, those holding between 10,000 and 100,000. So between $7,000 and $70,000 and $700,000 of Band. And they, currently are in a little bit of an accumulation spree. So, I mean, take that for what you will. It doesn't seem like they're always right. It seems like sometimes they buy the tops as well. So be a little bit careful. But yeah, on a network level, I'm just a little bit scared for Band because it doesn't seem like it's able to incentivize more activity on the network over time. Like I've seen this. Somebody asked us about Band maybe 3 or 4 weeks ago. The charts look pretty much the same, just a very low level of activity. We're not seeing any type of new adoption of the coin, at least on the on-chain level. Maybe trading volumes are looking better. Let's see. Trading volume. They're not. They're actually also declining. So, yeah, I'm not sure. Hopefully, we see some further activity, some increased interest in Band in days and months to come. For now, it's just not looking like it. All right, that's gonna be it for us today, guys. I want to thank you all for sticking by to the end of the stream. For all of you that did, there is a present for you guys. So. Everybody that knows us and that watches these streams knows that there is a discount code for people that do watch it. At the end, we always say you can get 25% off all of these metrics that we talked about today by typing in a code TWIC, which stands for This Week in Crypto, the name of this call, during your checkout. So whether that's a monthly plan that you want to buy or a yearly plan that you want to buy, you can get 25% off. So why not? It's Black Friday. Go treat yourself, right? I think generally speaking, I stand by the fact that, some Bitcoin metrics are looking strong, like whales, short-term MVRV, on-chain activity in terms of daily active addresses. Those are all still looking fine. The problem is where we're still not seeing a whole lot of panic on the market, both in terms of derivatives data, social data. We're still a little bit too overvalued for my taste. It doesn't necessarily mean that we can't grow from these levels, but I would like these metrics to reset and normalize even further before I can be super confident about the potential for recovery. So I hope you like this data. If you do, make sure to check out the site. Also, make sure to join our Discord app. There's a link in the description of this video where we talk about trading and other sort of metric strategies and backtests that we've done on our trading channels. So join those and talk to us live. All right, we're going to be back in a couple of days with another shorter video. And until then, you guys have a great weekend and stay safe. All right, thanks, guys.
Thanks. Have a good weekend. Bye-bye.